Okay, cool. So today was definitely a learning experience. I'm not gonna lie. I did stick to my bias, and the closer I'm doing this is getting me closer to my answer of how to revert back to a certain state of mind or a state of flow to be successful trading. And I feel like I'm getting closer and closer the more like I study, lose, and learn during the process to become a practitioner. Now, starting from the beginning, I seen automatically I seen automatically we have our new day opening gaps that are above price, currently at 7 to 7:30. Now, as 7 to 7:30 goes, create the data for us so we can know where liquidity is being engineered. I see that it's moving farther away from it. So I'm thinking, okay, cool. I know this play. I've seen this play plenty of times where price just this is our mark, price moving away from it, plays around, comes up, plays, comes back up, eventually comes back down a little bit more, and then it just explodes past our target. So that I know this play, and I see it 100% of the time. The only thing that is tricky about this is letting it play out and being patient and sitting on your hands, knowing when it's time. So going from 7:30 to 8, I see that price made a primary buy side liquidity and primary sell side liquidity. I see that primary buy side liquidity did not get swept out for a minute, but sell side has twice, and it's priming down. So I see right here in this little zone that, okay, we're for sure about to hit some kind of important area, or price is going to keep sweeping out engineering liquidity, gaining so much gas, it's going to explode in the opposite direction. So when news comes around, I see from 8 o'clock to 8:30, we're still heading down. Price swept out another sell side liquidity, and this was the current sell side liquidity after it swept again before news. Let me actually draw that out. Swept that out, and let me dim it down. I already knew that, hey, the news that we're about to get is going to be high impact news. I think it was high or medium impact news, but for sure it's going to have a impact on all this little stuff right here, all that little stuff. So I'm thinking, okay, cool. I'm thinking this will probably be an upset. I did not get in at this part at all. Not because, you know, I couldn't predict anything. I'm not supposed to predict. I'm just supposed to just follow. But I'm glad I didn't, because that would have been the first loss of the day. But if I had to, I would have had to find a fair value gap or take a change state of character and go off of that. But instead, I didn't. I watched it, and it honestly went way past our target. I wanted to see it. I felt like, wow, this really took off without me. I think that was the move of the day. But hadn't I take that trade, I'd be stopped out first. Like, my stop losses are only 10 to 15, and lately I've been doing 15. That's not enough. That little gray area, that's not enough. So I went ahead and just said, you know what? Price has to come back and recover all that open space, all of it. There's no way it's leaving it open. No way. So I waited and waited and waited from 8 o'clock through 8:30. And I see that price did, in fact, come all the way down, recovered all that open space, plus more, by taking out the primary sell side liquidity. So after that, I was like, all right, cool. This feels like the time. So and it has a wick. It was telling me like, hey, this area is getting a little sensitive. This may be the turning point. So I said, okay, cool. As soon as I seen that, I went ahead and went in on a entry. I seen this inverse fair value gap. Well, basically, I wanted this sell side fair value gap to be an inverse fair value gap, so I can go ahead and, use it as a bounce off, and just after that, target my original in dogs. But that didn't work out, and the next trade, I felt like it went a little bit higher, and I was like, I think this was the type of scenario where I entered prematurely and needed to get in again. Because if you haven't stopped out before and it's been way too early, that could be premature, or it could just, mean it's not that time. So to differentiate that real time is harder than trying to, no, it's actually harder to do it in real time than trying to, you know, yeah. But the fact is, if you feel like you've been prematurely stopped out, you can, if you are very sure, go in again. And I was very sure, so I went in again. So, it wasn't that time. And I was okay with it. I was at my last trade today. And I see it push down some more. And it actually touched London's low, London closing, which is that purple line. And I measured, because London's closing, the candle is here on that purple line, a little bit above. But then there was a wick way down here. So London lows had the body and the wick. So I measured the body and the wick. Not the body, but I measured the wick. And I outlined the closing of London at 3 in the morning. So I wanted to be very sure, like, hey, I want to see if price can touch London lows and then explode up. Now, exactly what I said, it just needed time. Time to, I guess, build liquidity, time to take out buyers who's trying to buy here, or trying to take out sellers whose stop losses are being trailed. And again, primary sell side liquidity was swept, and swept some more. And it did touch London lows. It did not go anywhere near the consequent encroachment of the wick. So, in fact, there should be a trade here. But instead, I took it where it was more like I see a fair value gap, buy side. And this was an honest trade right here. And I'm not saying that I'm not happy for it, but I am happy that I took an honest trade. So, seen that fair value gap, buy side, and we swept everything, and everything happened. I felt like this was the time. So I went in, I targeted the lowest hanging fruit, and it went against me. So that was the last trade of the day. And I knew I was so close, which was fine with me because I feel like I'm growing and I'm getting closer and closer to my answer, that when I took that loss, I seen it come right back down. And I was like, that was the one. Why? I want to say because of this. It swept out primary sell side liquidity again. On top of that, it was 9:30. Because I know 9:30 will pretty much help us go into the right direction that is headed towards the most gravitational reference point, which is the new day opening gap, which is above. So once it came here, swept that out. I'm actually going to dim that out and put the new on there. It should have been this guy here. Should have been this reference point right here. Let it play. Did it come back? Yes, it did, but it did not sweep. So this would have been a trade. That would have been a trade. Consequent encroachment of the first day presented. Fair value gap should have been a trade. And those are the only three that would secure safety that I could see. But the rest are just like pyramiding. So lowest hanging fruit, as you can see, they're circled here, here, and here. But, I think I'm getting closer and closer. I'm actually getting closer to where I'm getting more in sync with the market. So it's more like it's only a matter of time at this point. It really is. Because there's no other way to see it. Like how close I was from here to here. That's literally like what a 15-minute difference. And on how crazy patient I was today, I think that it's nothing to feel very, gloomy about. Like, yeah, I took 2 losses, but that don't mean that I'm going home, you know, broken. It's the fact that it takes time. But other than that, that's all I got. And thanks for tuning in.